Maybe I will do a screen share. Hold on here. Unable to share screen.
And also, I forgot, also guarantee issue as well.
Oh, okay.
Yeah.
Well,
Yeah.
let me see if I can get a screen share going here. Give me just a quick second. It was being a little particular here. So there we go. Can you see my life product mix matrix right now?
Yes.
Awesome. So if I was going to give you just a snapshot of what we offer as far as product type on the life side, this would be it. Because we have 3 different whole life contracts. Why 3? 3 different focuses. So kind of going from the top whole life down, Access Whole Life gives good early cash value access. The growth is going to be more your long-term accumulation product. And then the Value Plus is kind of just our staple whole life. It's the least expensive whole life contract that we offer. We have term, which is phenomenal. It spreadsheets very well. It stacks up well. It's got awesome convertibility. We have 2 main IUL contracts. Now we have our in New York IUL, which is our growth IUL, and then outside of New York, we have our growth 2. Very, very similar, but very distinctly 2 different products. So growth is in New York, growth 2 is outside of New York. Outside of New York, we also have a survivorship IUL, and then in all 50 states, we have something called our Value Plus IUL. When you mentioned GUL, I've got a product, and I think you've probably seen this with some of your brokerage carriers, where it's an IUL chassis, but it has an age 90 no lapse guarantee for the death benefit. So it gives you that look and feel of a GUL, but with IUL upside potential. We also have a current assumption UL. So that you might find of interest too. If you're looking for just a low cost entry into the permanent marketplace, the Value Plus UL, again, doesn't have indexing because it's not an IUL, it's just a current assumption. So I'm not sure how much just plain vanilla ULs actually come across your desk, but we do have that. And then just to give you a quick graphic, here is the 3 different whole life contracts. Now it does, I have to make some disclaimers right now. So it does say, because these are just my notes, this is not a slide that is ran through compliance. These are just my notes for when I talk through our product types. Issue age is 0 to 85. It's now actually 0 to 80. We do not
everybody has dropped their age.
I know. But technically, I've got rates, right? I can quote an 85-year-old. I have the rates to do it. I just can't issue it. We do, but again, I just want to make sure I'm throwing that out there. It does say minimum of $25,000. There is one footnote to that. My Value Plus whole life contract can go down to $10,000 of coverage, but that's up to age 70. So again, almost like a final expense alternative. It's not a guaranteed issue final expense. It is a simplified issue. We do expect that we're going to get moderately table rated individuals in that price line, but we do go all the way down to 10,000 on a simplified basis.
And what are some of your questions on some of your questions on your simplified issue cases?
It covers all the big knockouts. I mean, they're going to ask, there's about a half dozen medical questions on the application, but there are the big knockouts. You know what I mean? Like, history of cancer, history of coronary artery, exactly, coronary artery, diabetes. I mean, you're hitting all the big ones. So what I tell people is, yes, we will take moderately table rated individuals, but if you know for a fact, Lindsay, that this is going to be a traditional decline, it's going to be a decline with this
Simplified.
product as well. It is. It's just basically an opportunity to get a low death benefit, shorter application, non-med basis. And again, we have non-medical programs as well. This is one that's just a simplified app. So it is a shorter application, but like you said, it still has all the big knockout questions. That's a great question. And then now, are you doing with any of your whole life clients then, are you doing the be your own bank strategy like the IBC or the, okay, well, our Access Whole Life, that product came out of that marketplace, basically.
So kind of like the high early cash value policies.
Absolutely.
Okay.
Absolutely. That's exactly what it is. So that's the Access Whole Life. And then the accumulation product is the growth. So just think of us, I can tell you when I go head to head with Mass, I'm going to tell you how this works very honestly. Mass will have higher dividends than us, so they're non-guaranteed side, because we're at 5. Where's Mass at again for dividend rate? We're 5.
Right now it's at 6% right now.
Right. So if you do apples to apples, all things being equal, Mass should outperform me on a non-guaranteed basis, right? Because I have a 5% projection for my dividend rate. They have a 6. Here's where we continually shine when we stack up against Mass is our guarantees. So our guarantees of our whole life are much stronger than Mass. And I always say, well, why are you selling whole life, right? You sell it because of the guarantees. So that's my personal opinion, but I'm also trying to compete with the 6% dividend rate when I have a 5. I can tell you that it's a steady dividend. We have a great cost structure, so I do encourage you, to take a peek at our rates. That's for sure. Before I move off of whole life, do you have specific whole life questions for me?
No. I understand what you're saying. Let me ask them, do you guys have any questions about these whole life products that she just discussed?
Obviously, I'm giving you a high level. I get that. It's a very high level overview.
I think they're good. Let me see. Nope, they're good. All right.
Okay. So if you wanted to look at let me get past this. Hold on. This is just basically, I'm going to tell you this, Lindsay, we have all the bells and whistles. So the thing is, if you want to overfund with paid up additions, ours is flexible. So I love that about our PUA rider. You're not stuck at $1 amount. It actually can go as low as 50% up to 200%. So nice flexibility within that rider. You could skip a few years. Here's our history of our dividend rate. You can see for 2024, we finally got back up to 5%. We hadn't been at 5 since 2020. So we were super excited to get a dividend back up to 5%. Now with the IULs, basically 2 IULs, the Value Plus is protection focused, where it's really a GUL alternative because of that no lapse to age 90. So really neat little pricing niche. It's actually really low cost. It has awesome guarantees. Now, it's not a full GUL where you can go beyond age 90, but an age 90 guarantee, it's pretty impactful. And then the growth product, that's your normal overfunded IUL, max funding capability. Yeah, it's the one that's going to have one thing that I think you might find of interest. Have you ran across a lifetime income rider on an IUL?
I think what is it? I think
I only know of one. Yeah, I only know of one. Yeah. So basically what's kind of cool about it is we can illustrate taking that account value that you have at whatever point in the future, usually around age 65, something like that, around retirement age, and we will turn it into lifetime income. We'll have it as part of the policy. You'll never lapse the life contract, so you never have to worry about adverse tax consequences, and it's a free rider. So if you don't want to use it, you don't have to.
I
but
like
it's
that.
a really neat sales tool. The other thing I like to tell people about, that's the lifetime income writer on that screen. I want to get over to our big, hold on, this is what I want to show you, the Care for Life, because this is our feather in our cap. We love to talk about accelerated death benefit riders. Ours is called Care for Life. So what happens is on all of our permanent contracts, so whether it's the whole life contracts, the IULs, we will give Care for Life free of charge. And again, as long as your client is a table D, like David, or better, this will be included with the policy. So what you get is 25% of the death benefit if they become critically ill, 50% of the death benefit if they're chronically ill, and 75% if they're terminally ill. So with critical, you've got New York conditions on the right, everybody else on the left. We'll pay it as a one-time lump sum. Yeah, well, it's the truth. And here's the deal. New York is special. I love New York. That's my territory. I love it. But we do have a separate list of critical illnesses. So it's shorter, but it's also a little more open to interpretation. So even though it looks like we offer a lot less in New York, I personally think sometimes with some of our conditions, it's almost easier to qualify in New York. And I don't just say that lightly. What I love to talk about is the chronic illness, because that's the inability to do 2 of the 6 activities of daily living. Now, with some of your carriers, Lindsay, they will underwrite the individual at time of claim and see what their new life expectancy is. We don't underwrite at time of claim. That's why we give 50% of the death benefit. It's not that you have to qualify for a higher or lower amount. 50 is what it is. The only prerequisite is you can't do 2 of the 6 activities of daily living. We will pay that out annually up to that year's HIPAA limit. And what I like about it is the client knows the dollar amount versus some of the carriers that I know you're representing. They use the actuarial discount approach, which means, well, maybe you'll get this much, maybe you'll get this much. You don't know because they underwrite for life expectancy at time of claim. So I can tell you, I'm sure you can kind of think in your mind which one of your carriers do which way, but ours, I think, is really clear and easy for the client to understand. And then terminal illness, everybody has that. This is pretty par for the industry. Yep. Our term is fully convertible. We have a base conversion on our term of 5 years. Otherwise, you use what's called the conversion extension rider, and that will extend the conversion period all the way out to age 70 or the level term period, whichever comes first. You can convert to any of our products that I just covered, which is pretty cool. Plus, we'll give you a conversion credit. So here's all the parameters. I don't think I need to necessarily read this, but we have 1-year term, 10, 15, 20, and 30. Yeah, minimum of 100. Some of the riders that we have that you can add on to.
That's what I wanted to ask. Okay, I see.
Yeah.
What's your age for the children insurance? Is it up to, I mean, is this the child rider or is this just children insurance?
This is children's rider. This is a child rider. So what we do is 15 days of age up to 18 at issue, but then they're covered to age 25. And then at age 25, this is what's super cool. At age 25, they can actually convert and do 5 times the rider amount.
5 times the rider amount.
5 times at age 25. So here I tell people this story all the time. My youngest son, he's uninsurable because he has Crohn's, and thank the Lord, he was on where he had some insurability as a child, because now that coverage gets to stay with him, and now he's married with a baby and all this kind of stuff. So mind you, he needs more coverage than what he has, but again, he's got something, which is, I mean, he's got some. But my point is, this is automatic, where you don't have to prove insurability. So at age 25, boom, they can get 5 times the rider amount. So I think it's a great rider. I highly recommend it for
really
all
good.
parents.
5 times the amount. That's really good.
It is. It is. It is. I'm a big fan of it.
Okay. And how is your terms priced?
I'm sorry.
As far as the industry is concerned, where do you think you guys fall in the term pricing?
Top quartile. We are, especially in the state of New York, because there are less and less. I mean, I hate to say this, but when you're still at the dance toward the end of the evening, everybody starts looking a little better because you have less people. I'm telling you, we are up there. And I say that kind of tongue in cheek, but we really do price out well. We really do. I think you'd be impressed with our term rates. That's something, even prior to getting appointed with us, Lindsay, if you would like, I have no issue with sharing our term calculator with you, because our term calculator is just a URL. You don't have to have login. You don't have to validate your credentials. It's actually client approved. So you can share it with whomever you like. And then you could actually just type in dates of birth, date of birth, and it will give you our current term rates.
Okay.
So I would, if you want, I can give it to Charles and then he can share it. Does that work out? Is that all right?
Absolutely.
Okay. I will write myself a note, because if I don't write it down,
then it's not real.
That's Charles. Oh my gosh. Okay.
Actually,
Well, I
have
want
it.
to
I
make
use
sure
it
I'm
all the time.
answering. Yeah, we can share that, because if you have that handy, Charles, you can definitely shoot that over to Lindsay, because like I said, you don't have to be appointed with us to get that URL. Now, obviously, my goal is to, get your interest in Ameritas and join us through CG Wealth. That would be awesome. I can tell you that we have, again, I've been doing this 11 years at Ameritas, and one of the things I love is our commitment to the New York marketplace, because a lot of carriers have exited New York. Like I said, we have a big commitment. We also have a big commitment to keeping our broad product lineup. I told you 3 whole lives, 2 IULs, 1 UL, term, DI. We have a lot to offer. Are you predominantly just in New York then, Lindsay, or do you have clients all over?
All over.
All over. Okay. So just remember that we do have little nuances within New York.
6 states.
Oh, nice. That's awesome. And the reason I bring that up is just remember that New York pricing is always a little bit different than if you cross the bridge and go over to New Jersey, because if you run a term quote for a New York client, you'll get one rate, and then you can run it, like I said, cross the bridge, run them in New Jersey. Now, you know what I mean? I just want you to be mindful that New York is specific to New York. I just want to make sure you know that the products are available, but sometimes the pricing is different.
Okay. That's good to know, because I don't think any of the carriers that I'm working with currently have a difference in the pricing from New York to the other states. They have different process for underwriting and different process for applications, but I don't think it's a price difference. So that's good to know.
There's not a product difference. Sometimes there's product difference.
No, product difference, yes. Product for sure. Yeah, product for sure. Pricing.
Yeah, no, our term, like I said, 2 things that you'll want to know. Now, if you do whole life, there's no difference. If you do IUL, cap rates are a little different. If you do term,
the cap rates are different. Now that's true, because Core Bridge, their cap rate for New York sucks. So I feel it. Yeah, so the cap rates in New York, you're right, are horrible.
Yeah. Well, I just always want to make sure just people are aware that there are obviously you live and breathe this every day, so you know how New York is different. The other thing I want you to know is that we do have our accelerated underwriting program approved in New York, which means you can do, 2 million on a non-med basis, up to 50, a million after that. You can do non-med, all of our term, all of our permanent, it's all available. So we do that all through our online portal. So if you do pursue an appointment with us, you'll get a agent number that gets you access to the agent portal, and then through there you can run illustrations, you can submit your electronic applications. So it's all on that agent portal.
Okay, perfect. Sounds good. Sounds good. Sounds good.
What
Do you guys have
else?
any
What have I forgot?
questions?
Yeah, ask your questions, team.
If
I'm
you have any questions.
I
like I
don't
said,
have any questions. It sounds like a really, really good product, but I don't have any questions at the moment.
All right, thank
okay.
you.
A lot of times until you get into it, it's hard to, or if you have a pain point, like if you have a pain point with another carrier, sometimes you might be like, hey, you do this, or would you, I know how that works. I do. Well, we have 15 more minutes scheduled, so I don't want to cut anybody short. Do you want to see the agent portal? Does that have any interest?
Why not? Let's
to
see
you?
it. Let's
see
see
it. Let's take a look. Hold on. Go off video so I can get my other screen back up here. Share. Okay, so can you see something with our logo in the upper left-hand corner here?
The producer
Sweet.
workbench.
Yes, ma'am. So this is Producer Workbench. Like I said, this is our agent portal. You will go into this site to do really about anything that you want to do with Ameritas. If it is run an illustration, you create an illustration. If you're going to an application, you go to eApply. If you want to check status, we have a dashboard that you can check status on. We've got, comp statements. We have marketing material. We've got a shopping cart here if you need to order some client material. We have this little phone book up here so you can look up individuals. We have all of our product information just under insurance and annuity products. We have it broke out by product type. So if you wanted to get into our whole life products, well, then you can see here the Access Whole Life, the Growth Whole Life, and the Value Plus, just like I mentioned, a little bit ago. We do have our latest news corner of the website, and then we're really big into these WebExes. So attend an event. This is going to give you a list of all the upcoming webinars that you are able to register for. Lots of great topics. I totally recommend, always looking through what's upcoming in the next week or two to see if there's a topic that might interest you. The other thing I would talk to you about is if you do move forward with us, is to go into our learning management system, which is EDU. It's right here, Ameritas EDU. That's our learning management system. We have online tutorials, little, almost like little product courses that you can go in, listen at your own leisure. Definitely, highly recommend that because we have a module on everything. So you can spend as little or as much time as you would like really learning about our products. And then, you've got Charles as a resource, and his office, and then myself as an internal wholesaler. And again, you'll have your own underwriting, your own new business. It's pretty cool. I don't know. I think that's where Charles can attest that it's nice having your own team. You get to know people.
Yes.
All right. And I am in the home office today. So something that just came out of the pandemic, right? So I am what you call a hybrid employee, which means I spend half of my week working in the home office, which is in Lincoln, Nebraska, by the way. So I'm in Nebraska.
Okay.
And half of my week just working from home, which is also in Nebraska, just not I'm about a half-hour drive. Yep,
Okay.
yep. I'm in the area. It takes me, see, I'm not like you New Yorkers. My commute is 30 minutes, and I think that is horrendous. I'm like, oh my God, I had to drive 30 minutes. And I talk to my friends in New York, and
30
they're like,
minutes
are
is
you
just like
serious?
2 blocks in the city.
Absolutely. Yeah, exactly. Exactly.
Yes. So,
What else?
um,
What else can I help you with?
I mean, I think I do actually like the products. And the site, the dashboard looks really easy to go on there and further educate ourselves. And so I'm gonna just, have a conversation with Charles. And I definitely think I think the team really likes the products as well.
Hmm.
And so I think that yeah, I'm gonna have a conversation with Charles and see about
Awesome.
getting set
Uh,
up so that everybody will be able to um start putting some business in.
Hey,
That'd be awesome. Hey,
do you have
Charles.
any questions
Yeah.
on any underwriting, Lindsay, like specific cases that
Well,
you was having trouble with that?
well, not now because I mean I would have to just see, as the times come. But I mean, I guess I could say just like in general, um, sometimes if you have a bigger case, you're trying to keep them from having to wait 3 months to get things done, just being able to reach out and say, hey, this is the case. We got the medical done. Here's the doctor information. If you need the doctor, here's this, let's try to find a way to get we're either going to issue it or we're not, but let's
Mhm,
not
Right.
wait 7 months to find out that we are or we're not.
mhm.
Right.
So I
Right.
think that's more some of the issues I've been having is just the wait time. It's like you get the medical and we wait in 10 days to review it. Like for what? Review it.
Yeah.
Are we gonna
Yeah.
accept it? No.
We don't have that much of a lag time. I mean, don't get me wrong. If somebody's out, if your underwriter's out of the office, maybe it takes a few extra days, but I mean, Charles, you can attest to this. I don't think we have that tremendous of wait time to wait
Mhm.
for decisions on cases. Do you?
No, not at all. Not at all. And then
Yeah. Yeah.
we have people on top of these cases. Like we have Flora Carpenter, who's our designated case manager. I mean,
Yeah.
we have somebody that's calls on the medical records, right? We have a APS retrieval team that calls on the medical records, and we have Flora Carpenter who gets all of that information to the underwriter's desk, and then and if you use
Yeah.
the accelerated underwriting, you even take away that time because there's no blood or urine. You can get up to 2 million,
Right.
right? If they qualify. So I think that the key with Ameritas, you want to, before you submit it, and there's 3 different ways you can underwrite, right? You have the tele-underwriting, right? Because you have the accelerated underwriting, then you have the traditional underwriting. So that's something we can go over the 3 different programs
Hmm.
because I think the key is to know which is the best way to put the client, right? Because not all of them will qualify for accelerated underwriting. Maybe tele-underwriting might be better or
Mhm.
fully underwritten. So I think that's one of the advantages that we have is
Mhm.
that we have a book. We have an underwriting guideline that we can see, which way it'd be the best way to submit the case. I mean, that saves a tremendous amount of time,
Mhm.
that alone. And then you have me that works I still like, because I'm still an agent at heart. So I go out and I know the cases.
Yeah.
I know how important the commissions are. Like I know today's the commission cutoff for New York and tomorrow for, all the other states. So pretty much clear my desk on commission days and work pending. Then when I get stuck, I reach out to Kristi, say, hey, what's going on? Before I call the underwriter directly, I call Kristi's like the buffer between me and her because I don't want to call the underwriter, especially if I'm upset and really mess up the case.
Yeah.
So Kristi's the buffer.
I diffuse. Yes, I diffuse if Charles gets upset, which isn't very often. Let's be honest, Charles. You are the most even-keeled gentleman I have ever met. I think I've seen you upset like maybe twice in how many years?
Yeah, right. So that's because you diffuse the situation. I'm like, okay, okay. And then we still have the ability, we can call the underwriter directly, which is
Yeah.
at mass,
Yeah.
you can forget it. There's no way in the world they'll take your call. They'll run you in
Right.
circles. So
That was
those
a luxury I had in New York Life, being able to call. I used to have my own underwriter.
yeah, that
Oh,
that
at New
helps.
York
That
Life,
that
you
helps.
did?
That helps a
Yeah,
lot. Yeah.
when you
Yeah.
are at a certain level in New York Life, like depending on your tier, then you get your own underwriter.
Yeah.
Gotcha.
Yeah.
And it's
Well, that's a
amazing.
benefit of ours. Coming in under Charles, you're automatic. You get his resources, which is I think, a very nice perk for you,
Mhm.
because you've got him.
Absolutely. Right. So
Like,
You do.
that would be the, we just go through the underwriting. We have to go through that. And up front, and I can say, okay, this case will go for accelerated, I think, or to get tele-underwriting may be better for this, or just go full traditional underwriting. It just depends on the case that
Yeah.
we're submitting. And then
Mhm.
cover
Yep.
letters always help as well. Okay.
Okay.
I just have
Yeah.
a quick question in general.
Yes, ma'am.
As far as mental health, like anxiety, depression, how is Ameritas with that? Because that's something that we're noticing a lot of people have, like generalized anxiety and things of that nature now with companies that are sometimes harder to underwrite. So I'm just
Yeah,
curious,
Charles,
do you have any
do
information
you have an
on
opinion
mental
on
health?
that, Charles?
Well, yeah. Well,
I
no, the
have not.
issue they may want to. That's a situation where they require an attending physician statement. And I know what the underwriters, and we have an issue. I have one now, a juvenile, actually, that's going through a tough time. Actually, like a 20-year-old.
Mhm.
Is going through a tough time and seeing a therapist, and that came up because they can see it because they do the pharmaceutical check, so they can see if there's any prescription medications, if anything was prescribed, so they can see that. And then what happens is they'll want the attending physician statement. Then they have a questionnaire, right? And I believe from my experience, what they're looking for is if the person is suicidal.
Okay.
So if they're not suicidal, these cases been getting issued standing. But if
Yep.
they're a threat to their self and they can't work, and if they're unable to work, um, if they're really serious, then it's a different story, right?
Yep.
And but if they're able to function, work, and depression, and they'll one of those situations will require an attending physician statement and a questionnaire. That we know. So if you know that up front, you can actually submit the questionnaire up front, so that doesn't hold up the case. And then they'll just want a statement from the doctor, and like I said, they're just looking to see if that person is suicidal or a threat to themselves or others.
Yep. Yep.
And we've
That's
Okay.
a
been getting
fair
that a lot, and
assessment.
we've been getting that a lot, especially since
I
COVID. So
know.
that's something
Yeah,
that's
I know.
the
Well, that's why
anxiety
I asked
and the
that
depression
question.
is crazy.
Mhm.
Yeah, that's
Mhm.
why I asked, because that we got a lot of that.
Yeah.
Yeah.
And like Charles said, because we're going to see the scripts prescribed and filled. So then we just need to see if everything's matching up, if the level of, the medication is on par with, like you said, seeing a therapist, seeing a counselor, seeing a doctor, they're just going to want to see, are they still actively at work, and just look at it's not just the mental state, it's really the overall picture. And that's what you all do well, is paint that overall picture for the underwriter. And that's why I always say underwriters don't know your client, right? They only know what you present. So if it's something, like Charles had mentioned, getting to know your underwriter, there's a lot to be said about an impassioned cover letter. Like if you really, know someone well and know what their medical, background with mental and anxiety issues are, paint that picture, make sure, because like Charles said, we just have to make sure that they are, stable, and not, like he said, threatening self-harm.
Okay,
So
thank you.
yeah. Isn't that such a subjective area now? I mean, that's that's a tough one. But I feel like we're really open to conversations and just like Charles said, we'll get the doctor records, and that's really what, between you and what we see through the doctor records, that's how we're going to assess.
Okay. Yeah, that was just something.
Yeah.
I've had some of those cases and definitely just trying to, figure out best options for them. So I just wanted
Yep.
to hear
Yeah.
about.
And that's automatically going to be something that I would suggest goes traditional underwriting, or at a minimum, maybe our tele-underwriting. And I am going to just pause really quick. Have you guys used tele-underwriting? Because Charles mentioned it. So
Yeah.
you're all aware of, you don't have to ask the medical questions. The interviewer on the phone.
Mm-hmm.
Yep, they'll do it all on the phone. Yep. And
Yeah.
it's funny, you know what I have found? And I
Only
don't
thing about
I'll
the
apologize.
calls, you have to prep your client because they get on the call
and we have
they think they are friends with these people and they tell them the wrong information. They'll be like, yeah, so 12 years ago, they said I might be diabetic. It's like, what? Are you diabetic today? No. The answer is no. So
the answer is no.
They talk too much. They'll tell them they
Yep.
smoked weed for fun on a trip 3 years ago.
Yeah.
So I feel like with my only scary thing is that I do use that when I use Corebridge. But I prep the client, right? Don't prep them through email because you got to be very careful about what you're saying,
And it's an option, Lindsay. That's what's great about our company is you don't have to ever. Like if you want to go through the medical questions yourself, you can knock yourself out and do it every single time. You do not, I'm just saying it's an option. And what I was going to say is a lot of my male advisors, when they're getting in front of female clients, especially as they get a little bit older, the women, they don't want to talk about, mammograms and menopause and hormonal replacement therapy. And it's kind of funny. I feel like a lot of my male advisors get a little nervous around their female clients and don't want to ask all those questions. And again, I'm generalizing, but it's an option. If you want to use it, use it. If not, don't worry about it.
It saves a lot of time on the application for you.
It does make the application.
The app is quicker.
Yeah. And
well,
that reason I love it.
Any last minute questions? I know we scheduled this for 45 minutes. I want to be respectful of everybody's time.
This was good. I actually have another call coming up in 15 minutes.
Okay.
So
All right.
So thank you so much.
Charles, give me a call.
Okay, I will.
Okay.
All right, everyone. Thank you. Thank you,
all right.
Kristi.
Thank you for your time, Kristi.
All right.
Charles.
Thank you.
All right.
Take care.
All right. Bye-bye.
Bye-bye.
Bye.